Good evening or good afternoon, everyone, and welcome to this webinar hosted by the Australian American Chamber of Commerce in San Francisco. My name is Melissa Zajic and I am the Executive Director of the Chamber, and I'm delighted to welcome you all this evening. Whether you've been in San Francisco for a few years or even just a few months, many of us grapple with similar questions with regards to how to approach the Australian property market. Like, when is the right time to buy? Where are the opportunities? And how do I even start the process when I'm so far away from home? So I'm delighted to introduce our expert speakers tonight, Richie Regal and Michael Cleary, the co-founders of Milk Chocolate, a company that was built to help Australian expats navigate the Australian property market from abroad, and a business member of our chamber here in San Francisco. Richie and Michael have built their expertise specifically around the expat experience and have helped hundreds of Australians in situations just like you living here in San Francisco. So over the next 45 minutes, they will share valuable insights into the current market conditions, emerging opportunities, and practical steps for purchasing property from abroad. There will also be an opportunity for Q&A, so don't forget to drop your questions in the Q&A box. And grab your coffee or perhaps something stronger, and let's explore how we can make the Australian property market work for you, no matter where you are. So over to you, Richie and Michael. Thank you.
Awesome. Thank you, Mel. Thank you. It's nice to meet everyone. And again, just thank you so much, Mel, for organising this webinar for us, and just for everyone that's jumped on. We really appreciate you taking sort of 45 minutes out of your evening. And so just again to clarify again what we're going to be talking about tonight and what Mel touched on. So over the next sort of 35 minutes, we'll be taking you through a presentation, and I'll be talking about what it is that we actually do at Milk Chocolate. So appreciate that some people on that webinar know about our services, but for those that don't, I'll just take you through those. I'll then hand over to Richie, and he will look at the current, or take you through the current state of the Aussie property market, the macro trends shaping growth and what to watch out for, the property cycles and what they actually mean in Australia, where we see the next investment opportunities emerging. And then I'll jump in again just to talk about how to confidently buy property in Australia as an Aussie expat. And then, as Mel mentioned, we'll have about sort of 5 to 10 minutes at the end there just for Q&A. The standard disclaimer, so please, any advice is general in nature and you must consult your professional services providers before making any decisions as well. So just to quickly go over that. So what it is that we do at Milk Chocolate for those that are new and don't know about us. So just to a quick backstory. So both Richie and I were Australian expats ourselves. I was living in Canada and Richie was living in the UK. And we wanted to purchase properties in Australia, and it was very difficult to do, just the process, who to trust, and all of those sorts of things. So 9 years ago, we established Milk Chocolate, and we established Milk Chocolate to help Aussie expats plan, buy, build, and manage property in Australia. So we have lots of clients here in San Francisco. Rich and I are working out of Berkeley today, so here on the ground. But we purchase Australia-wide for our clients. We purchase investment properties. We purchase family homes. We look after construction, we look after property management and so forth. So there are all of our services on the screen, and I'll take you through those team members in a moment as well. But firstly, just a little bit more on Richie and myself. So I'll hand over to Richie just to introduce himself properly.
Thank you, and hello everyone. So as Michael said, my name is Richie. I'm one of the co-founders here at Milk Chocolate. So both Michael and myself have been purchasing, renovating and selling property since 2006. So my role specifically in the business is that I oversee the data and analytics team, the purchasing and construction teams. So personally, I've guided hundreds of our clients through tailored property strategies and game plans. I've overseen $400 million worth of property transactions and have personally helped 120 clients purchase properties across Australia. I'm also the licensee in charge and nationally licensed in Australia as well.
And so just a little bit of background on me. I look after our sales, marketing and all of our customer experience, and have helped hundreds of our clients through their purchasing journey as well. So lots of Australian expats purchasing properties back in Australia. And it's not just us, we actually have quite a big team back in Australia. And so to take you through that team in a little bit more detail, we break it into what we call service verticals, and we have 4 service verticals across the business. So we have a research, planning, data and analytics team. So that's a team of economists, property economists, qualified property investment advisors, machine learning engineers and data scientists. We then have a full purchase and due diligence team, so a team of licensed real estate agents that have predominantly worked in sales, but are now buyers agents working just for our clients and purchasing properties for our clients and executing on those briefs. They're expert negotiators, highly skilled, and with many years of subject matter expertise. We also have a full construction and design team. So we have a team of builders, architects. Our construction project manager has a PhD in construction project management, and we look after maintenance, major structural renovations, cosmetic renovations, and subdivisions if required. And we also have a property management team. So we have property managers, maintenance managers, and leasing managers. So just to take everyone through the broader team and all of those subject matter experts as well. And then just briefly, before we jump into it, just to take you through some of the results that our business has achieved. So as mentioned, we've been purchasing, or Richie and I have been purchasing properties since 2006, but commercially as milk chocolate for our clients since 2017. And so over the almost 9 years, we're really proud of the results that we've achieved for our clients. So just the investment properties that we've purchased for our clients on an average have increased in value by 14% capital growth year on year. Currently, the rental yield on the investment properties we purchase for our clients is 3.4%. So a total gross return year on year of about 17.4% at the moment. So hopefully that just gives you a good indication of what it is that we do, the team behind us, and some of those results. And then I'll hand over to Richie just to take you through what everyone really wants to hear about, which is the Australian property market.
Nice one. Thank you, mate. So, yeah, guys, there's a fair bit to get through. So I'll do my best to take you on a little bit of a journey and take you through some of the key data points and what's actually happening on the ground at the moment. So let's just firstly start with what are the highlights. So a couple of things to look at here. So firstly, price momentum. So at the back of 2024, prices across Australia were certainly softening, but that was revitalised at the start of 2025 when we did start to see, the first interest rate cut in February. That certainly reignited buyer behaviour. There was more confidence coming into the market and ultimately more credit available, and that's going to drive prices moving forward. So we are starting to see that happening at this particular point in time. The nasty T word, tariffs, which I'm sure you're probably sick of hearing, it certainly is weighing on household confidence at this particular point in time. From an Australian perspective, our exposure to the US is limited to around 4 to 5%. However, what we do need to look at is just the indirect effects with other trading partners like China. Obviously, we've got a significant mining export industry, and that may have an influencing factor on what happens within those particular geographies in Australia that is primarily focusing on the mining industry. But what we do know intrinsically that Australian property has always represented an enduring asset with the utility value, and it was always and has always been recognised as a safe investment for a lot of Australians. We're certainly seeing that on our side with a lot of lead inquiry coming through based on the fact that they feel like the equities market is quite volatile at the moment and they want to put their money into bricks and mortar. And that's certainly what we have seen historically over the long term. And it's certainly a safe market in respect to what we've seen across multiple residential property markets across the world. The Australian property market has always been seen as a pretty stable environment to be investing into. So that's going to continue to drive demand into the Australian property market, certainly in the short to medium term. Transactions, as I said, transactions were certainly slowing at the back end of 2024, and we also sort of had a bit of a slower start. The roll-on effect of the first interest rate cut has now been recognised. We're starting to see a lot more buyer behaviour and demand coming into the property market. So what is also going to continue to drive transaction volumes and growth and demand into the property market is some policy, especially now that we know that the Labor government is in term for another 3 years. One of their key policies was influencing first homeowners. So trying to get more first homeowners into the property market. And so one of their policies was to allow them to purchase a property with just a 5% deposit and the government guaranteeing the remaining amount. So it's obviously going to increase their capacity to be purchasing properties and obviously adding more competition into the market across most affordable real estate markets in Australia. So certainly keep an eye on that. It still does need to get passed in Senate, but I don't see any potential blockers at this particular point in time in that respect. Rate cuts, which I'm sure you're all aware about. So we had a rate cut in February and we obviously had a recent rate cut last week. So 2 cuts in 2025. Our team and our economists believe that there is at least going to be another 1 to 2 more cuts this year, and that's only going to continue to drive buyer behaviour in the Australian property market. So a little bit more credit, a little bit more liquidity means more value for buyers getting into the Australian property market, and that's going to continue to drive growth moving forward as well. And then just finally looking at rental growth. So the more recent times, we saw rentals increasing by about 10% year on year. So that was on the back of COVID. It's currently sitting at about 4.5% growth year on year, and historically it sits between 2 and 3%. So we're certainly starting to see that ease and normalise into historical levels. Demand is easing due to affordability pressures and normalisation of migration. However, on the back of the recent government, sort of obviously Labor taking another 3 years, it's certainly a little bit more buoyant in terms of keeping those borders open. So overseas migration is going to continue to create more demand, especially initially from a rentals perspective, and then moving into a property sales perspective. Rate cuts are certainly going to lower landlord costs, so potentially removing the need to continue to drive rents up as much as they have been going up. And then what we always do say to our clients is that A-grade assets and A-grade locations are certainly going to negate the need for you to rely on those macro fundamentals of increasing your rent. So if you own a great asset and a great location, you're going to create your own demand because you're going to attract the best quality tenants in the best areas, which is naturally going to provide you the ability to continue to grow your rental year on year. So that's essentially a quick and around the grounds from what's happening across the board. The next slide we're just going to touch on is taking a deeper dive into some of the data for the Australian capital cities. So what we've got on here is the capital cities on the left-hand side, the current medium house price, the percentage change year on year, percentage change quarter on quarter, and percentage change month on month. So the reason why we're showing you those three data points is because we want to firstly look at what's that medium trend looking like, and then taking a bit of a deeper dive and understanding what's happening in the short term. Are we starting to see any sort of changes within how those particular markets are performing, which is giving us an insight to what might we see in the next month, quarter, and years ahead. So the next slide I'll talk to is about the property cycles and the length of the cycles. But what we're going to talk about here is essentially what we're seeing, if there's any initial trends. And so I've highlighted two on this particular chart. The first one is Melbourne. So as you can see, the percentage change year on year is sitting at negative 1.3%. And Melbourne has, unfortunately, on the back of COVID and those extended lockdowns that we did see, has remained in a negative growth position since that particular point in time. But in real positive news, we have seen the first quarter on quarter change from a positive growth perspective between January and March. That's a great news story. Melbourne, unfortunately, yes, was affected by those government implementations of those extended lockdowns. And it's the first quarter on quarter growth since we've seen that since that period of time. So month on month change is sitting at 0.1%. And we're certainly seeing that on the ground as well. This is probably not reflecting the true growth in that particular market. And when we're looking at Melbourne, we also can put into this particular bucket those regional markets such as Ballarat, Geelong, and Bendigo, for instance. And it's a great story. We've been purchasing there since 2024, mid 2024, and in that particular point in time, there was certainly less demand in that particular market. But moving into 2025, we started to see more demand and more buyers and investors, in particular, finding this market more attractive and affordable in comparison to some of those other capital cities in Australia. So that's a good news story. Outside of that, Darwin as well, you can see is coming off that negative growth of 4.35%, but really strong quarter on quarter growth here, 2.4%. So certainly illustrating that that particular market is moving into its next growth cycle, primarily driven by affordability. So you can see it is the most affordable capital city. And likewise, it has the highest house and unit yields, so sitting at 5 and 6.7% respectively. So some big numbers there to look at. And outside of that, you can look at Canberra. So Canberra, negative 2.3%. Again, a quarter on quarter growth of loss, of negative 1.3%. But interestingly, in April, we saw it record positive growth of 0.4%. So potentially signaling that we are moving towards the bottom of this particular cycle and potentially moving into its next growth cycle at the back end of 2025. Brisbane, Adelaide, and Perth have been the top performers in Australia for the last 36 months or so. Brisbane is illustrating a negative growth quarter on quarter for 0.3%. However, we call that a glitch in the system, 0.4% in April. Brisbane has a significant amount of infrastructure driven by the Brisbane 2032 Olympics, and that's going to continue to drive growth. And we'll lean into exactly where this particular market is within its historical trends to try and identify how much more growth we think there is left in that particular market. So if we move on to the next slide, this is going to take a look at the national property clock. So a really simple chart here, guys, but it's really interesting to point out where some of these markets in Australia, so both capital cities and regional markets, are sitting on the national property clock. So we use 12 o'clock as the peak of the market and 6 o'clock at the bottom of the market. You can see we've highlighted some of those regions in green at between 6 and 8 o'clock. That is representing markets that we believe are in the right period of time to be investing into. So the reason why we do that is because they have the strongest short to medium term growth prospects. And if you're looking to build an investment portfolio and generate equity, you ultimately want to be doing that for a sustained period of time to generate enough growth to enable enough leverage to redistribute those funds into additional acquisitions. And so you can see what we've got here. We've got Melbourne and Hobart leading the charge from the start of the recovery, and then you've got the majority of those regional Victorian markets, as well as Central Coast, Newcastle and Darwin. In the bottom of the market, you've got Byron Bay, Illawarra and Southern Highlands. You've got Perth and Adelaide still in the rising market. We'll touch on how long we think that's got left in those particular markets. And also you've got Sydney and Brisbane, which we've identified as approaching the peak of the market. But what's really important to identify and understand in this particular chart is that Sydney and Brisbane are quite large in essence. And so those particular markets, when you're sort of looking at that as a whole, yes, potentially from a data perspective, the rate of growth is slowing and therefore may indicate that it is reaching the peak of this particular cycle. However, if you strip out some of those micro markets, such as Greater Western Sydney, where there is a significant amount of infrastructure being built, so about $18 billion being spent on the new airport, train links and also road infrastructure, creating 200,000 jobs in that particular market. There's still a lot of demand because it's still relatively affordable in comparison to some of those other cities, so other suburbs in Sydney. So certainly that particular market could be pulled out as a micro market. And I suppose the key story that we want to get across here is, generally speaking, those main mastheads, especially in Australia, the SMH, Daily Telegraph, etc., will certainly brandinize the whole of Australia in one headline. So Australian property market booming or Australian property market busting. That's not true. As you can see, there is always different markets performing at different paces in the cycle, and there is always opportunities in the Australian property market. So it's unfair to say that the whole market is either going through a boom period or a bust period. So I suppose just wash that with a grain of salt, and make sure you do your research and understand sort of what those micro markets are doing in Australia and how they are performing at that point in time. So if we move on to the next slide, this is just taking a bit of a deeper dive into the property cycle duration analysis. So we are going deep here. And so what we're going to look at is those capital cities. And historically, we have identified what is the average time each city sits within either the peak to trough cycle or the trough to peak cycle. This is historical figures, and it's certainly not an indication of what may happen in the future, because there is always different key drivers, such as what happened in Melbourne with those extended lockdowns. That's certainly an outlier. But if you just want to take a look at the historical averages, it's not a bad place to start to understand, hey, when do we think this market is going to boom, or how long do we think it's got left before it's going to start to cool, etc., because it's really important. And so a couple of ones that we'll look at here is Brisbane, first and foremost. So you can see it's currently in the trough to peak cycle, as we touched on. Historically, it sits in that cycle for about 10 quarters. And we've seen 6 quarters of positive growth to date. We can remove the last quarter as a bit of an outlier. That was essentially a neutral position. So essentially what we're saying historically, there's probably another 12 months of growth left in this particular cycle. However, historical growth drivers did not include $20 billion of infrastructure being spent for the Brisbane 2032 Olympics. So that may indicate that this may be an extended period of growth, or it may not. So it's important to keep an eye on it. And that's why we track it from a year-on-year basis, quarter-on-quarter basis, and month-on-month basis, so we can keep our pulse. Likewise, we're always buying in these particular markets, so we understand when those markets are slightly increasing, we've got the ability to negotiate a little bit harder. It generally means there's potentially a bit of a softening in that particular market. A couple of other ones to look at here, interestingly. So you've got Adelaide. So historically, it's sat in the growth cycle for 10 quarters, and we're currently at quarter 18. That is primarily driven by the fact that when Adelaide started this particular cycle, it was basically the most affordable capital city in Australia. It's now sitting about fourth on the ladder. And that is why it's sat in that period for a significant period now, and likely to have continued growth over the next 12 to 18 months as well. And that's primarily driven by the fact that there is still affordable locations in Adelaide or Greater Adelaide, so both north and south of the major CBD, that are still affordable, providing strong enough yields and development opportunities, which is driving investors into those particular markets, and still relatively well connected. You can still get to the Adelaide CBD via train in less than 1 hour. So that market is going to continue to grow. And the other one we'll just point on just quickly is the Canberra market. So eight on eight, so 8 periods in 8 quarters of peak to trough, and then 8 quarters of trough to peak. And we're currently just seeing the 8th quarter of negative growth. The reason why I'm going to highlight this is because that chart I showed you previously, that month-on-month growth, it did show that Canberra recorded a positive growth rate for the last month. And certainly we're not going to use that as an indication to say, yes, it's definitely in that next cycle, but it's probably a great indication to stipulate that we have reached the bottom of the market. We might remain there for a couple of quarters before we start to move into that next cycle. And historically, we do know that it sits in that cycle for about 2 years. And Canberra and Adelaide and Brisbane are those 3 markets historically have been stable markets without that volatility that we see in Sydney and Melbourne. So you could probably assume that Canberra is going to see a pretty significant amount of growth over the next 2 years. And that's likely going to start at the back end of 2025. So I think that's probably enough on this particular chart. We might move through to the next page. And this is just a great illustration of timing and buying in the right markets at the right time. So 2 example suburbs that we've got here. One is a regional Queensland market at the top, and the bottom chart is a regional Victorian market. The reason why we're showing you this is because there's a lot of property spruikers out there at the moment spruiking the suburbs or the location in that top chart. And as you can see from our data, we can identify that we believe that it's reached the peak of this particular cycle, and it's likely going to see a declining in growth. Although it's coming off, really sharp growth, that's certainly going to be slowing. And we don't believe there's enough drivers to keep that fundamental strong growth over the long term. So the bottom chart is a little bit different. You can see we're certainly sitting at that bottom of the market. It's plateaued and it's really about to move into the next phase. And we started purchasing this market mid-2024, which is when you can see that market starting to move forward. 2 other things to look at here is the fact that in the top chart, since 2009 through to about 2020, that market remained in a negative growth period for about 10 years. Really what influenced that growth was the fact that COVID took place, and those remote locations started to benefit on the back of COVID, and that's where we saw that significant growth at that particular point in time. Whereas in the bottom chart, you can see this is a market that since 2009 through to 2021, when they had the extended lockdowns, was a market that was basically always performing in a positive growth territory. So we were investing in this market in 2018, 2017, 2018. And obviously, unfortunately, COVID hit, those extended lockdowns, and the handbrake was ripped right up. But we started to purchase back in that market again at the mid last year. So 2 great examples of making sure you know your data, understand cycles and timing, and when is the right time to get into the market. Because if you're purchasing in the bottom graph right now, you're obviously going to see some sustained short to medium term growth. If you're purchasing the top market, you're likely going to see little to no growth in the short to medium term, which is not going to be great if you're looking to build a portfolio using equity. So we can move on to the next slide. And these are just a couple of things, guys, that you can look out for when we're talking about macro influences that are going to accelerate or decelerate property prices in 2025 and 2026. So on the left-hand side, we've identified 4 key influencing factors. So we've got interest rates. So if there is going to be continued rate cuts, that's certainly going to provide more buyer confidence. It's going to put more credit into the property market and therefore bring in more demand, which is going to put pressure on prices increasing. Global uncertainty, as I touched on at the start of this presentation, more volatile the equities markets are globally, the more likely investors are going to look at the safety net of residential property. Supply constraints are still a big issue. We can't keep up with demand at the moment, and we need to build a significant amount of new homes by 2030, and we're well behind that target. So therefore, if we can't construct homes, people are going to be looking to be purchasing existing established homes. Again, is going to put pressure on prices increasing. Policy stimulus, such as what I touched on, a policy that's going to drive demand, such as first homeowner grants, is certainly going to drive prices up. What may decelerate property prices in the next 2 years is affordability and heightened mortgage stress. So as we know, it is getting to the point where a lot of people feel like it is unaffordable. However, we are starting to see a little bit of a trend of investors taking the rent vest opportunity to get themselves on the property ladder, take advantage of what's happening in the Australian property market and use that as leverage to get into the family home at a later date. But heightened mortgage stresses, so driven by potentially softening labour market and rising unemployment, is certainly going to put stress on households, and therefore we might see more properties sold through default. Slower than expected economic growth or recessionary pressures, easing supply constraints or weakening demand drivers, and renewed credit tightening or macroprudential intervention. So a good example of that is in 2018 when APRA intervened, and basically they increased the serviceability threshold to make it harder to acquire credit, or therefore to reduce the amount of credit you can get. So that did certainly soften the market at that point in time, because there was a feeling that the market was appreciating in value too quickly. So therefore they made it harder to get credit. So that is again something that may happen, which may remove the ability to borrow as much money, if any, therefore removing credit from the market, therefore putting pressure on prices to decrease. So that's some macro influences. And then just finally, guys, the last slide is going to talk to what you can expect or where you should be purchasing in 2025, 2026. And so essentially, I'm not going to tell you exactly where, but I can tell you what to expect. So Perth and Adelaide are likely going to be the strongest performers in 2025 and early 2026 when you're looking at all capital cities. Certainly believe Melbourne and some of those regional Victorian markets are going to rebound really strongly, driven by overseas migration, first homeowners, relative affordability to other major markets, and also the fact that it's just been it had subdued growth due to those lockdowns for a significant period of time. It's inevitable that it's going to move in this upward direction. Expect apartments to potentially outperform freestanding homes in 2025 and maybe a portion of 2026. And this is primarily due to affordability constraints and stronger yields. So, however, if interest rates continue to come back down, therefore yields may not be such a requirement, because investors are chasing yields because their interest rates are increasing. So therefore they're looking at more rent to cover their debt, so they don't have to have as many out of pockets. But interest rates coming down may remove the need for this to happen, or such as this to sit as much as a priority for investors. Expect regional markets in WA, SA and Queensland to continue performing well. Again, this may be stifled because those markets are generally markets that are identified due to their stronger yields. And expect to see Darwin record positive price growth and potentially outperform Perth and Adelaide as well. That is going to be primarily driven by the current price point, stronger yields, and also social media influencing. So there's a few spookers out there pushing this particular market. We certainly, yes, it's going to perform well, but we certainly don't have faith in the overarching underlying fundamentals from a macro perspective and economic growth that's going to continue to drive this market forward in the longer term. So certainly is a bit of a short-term play. If you want to have a dabble, do that at your own risk. And then finally, if you're looking at other opportunities, so infrastructure is certainly a major driver for growth. So key infrastructure projects, as I touched on, Western Sydney, so about $18 billion of investment going into that particular market. Southeast Queensland, so Gold Coast, Sunshine Coast. You've got the Redcliffe region, you've got Ipswich as well. All those areas are really going to benefit from the infrastructure that's happening and the spend and the jobs that are being created, and also driven by interstate migration as well. And then other projects outside of that is you've got the Melbourne the rail link, planned investment in healthcare and education in Monash, and Frankston in Victoria, and also Adelaide northern suburbs, and continue to see the Metronet rail extensions in and around Perth to drive property prices. So hopefully, guys, that's a bit of a market around the grounds. On the next slide, I'm just going to talk to you about the process that we take when we're looking at how we identify assets and locations, and the pairing process that we undertake. So that milk chocolate, as Michael touched on up front, we have a whole data and analytics team. We have property economists, machine learning engineers, and they're responsible for primarily building out what we call a milk chocolate game plan. So that takes into consideration your key inputs, what are your goals, and we'll show you how you can use property and the strategies within property to help you achieve those goals. Once we identify what is the right game plan for you, we then execute what we call a pairing process. So our platform will pair the right location to suit your game plan requirements. So what we're saying here is we're not a one-size-fits-all approach. We don't put all of our clients into one particular market. We have identified hotspots all around Australia at different price points, different yield requirements, different development opportunities, and we make sure that we're putting the client to the right location based on the economic outputs of the game plan. So this is just a visual representation of what you would expect to see when you're being paired a location once you've approved a game plan. So we'll firstly guide you through the macro fundamentals of why we like this particular market, the specific suburbs that we've identified, and Milk Chocolate's proprietary scores that we use. And then you can also see our forecasts, how that's going to track against the national market averages, and also the types of residential real estate you can expect to be purchasing in those particular markets. So that's a little bit about how we go about pairing locations to the data and to your game plans. And if we just move on to the next slide, this is just a subtle variation of what I've just shown you. So if you are looking to purchase your family home, there is obviously those bespoke requirements and subjective needs that you need. We will firstly focus on those to help us identify what is the area from a lifestyle that you are, I suppose, working towards. So we'll take into consideration, where do you work? How far do you commute? What is your maximum commutable distance? Schools, are they important? How far? Any particular schools? Family, golf, parks, swimming areas, beaches, whatever it might be. We get all of that information on top of what's your asset requirements, such as, is it a house? Is it a unit? How many bedrooms? Do you want a pool, barbecue area, grass, no grass, etc.? We get all of that information, throw it into the washing machine. Ultimately, in that middle screen, you can see a bit of a heat map, and this identifies what is the perfect sweet spot for where you should be purchasing that particular property based on your subjective inputs. You then have the ability to review those inputs and we score those inputs in specific suburbs. So you can see how those scores rank, and you can compare side by side. You can also include suburbs that you think would be desirable, and then ultimately you have the ability to select or unselect suburbs that we continue to search in. So two different approaches. One's purely based on the economics and the market fundamentals of generating its maximizing capital growth or yield, whichever it might be, or both. The second example is how we take a more bespoke approach to help you still identify what is the best location to be purchasing your family abode in. And I think that is it from me, and I might hand over to Michael.
Thank you, mate. You can have you can take a breath. So I hope everyone sort of just got a bit of an indication on where we're seeing the property market around Australia at the moment. Just Richie sort of spoken to this, but just to to essentially again sort of lean into how we help Australian expats purchase properties back home. We do have our team of subject matter experts, and we've also built a digital platform as well. And here's just some screenshots of that platform just to show you what that process looks like, to give you that confidence in purchasing property back in Australia. So we work with our clients to identify that game plan. So that's all the research, the data and analytics to help them identify, if it's an investment property, where they should be purchasing that investment property, or as Richie pointed out, if it's a family home, what are going to be those best areas for you. So on average, our clients have been out of Australia for 12 years. So whilst they might have been born and bred in Melbourne or Sydney or Perth, they're unsure if, what areas have gentrified or what suburbs might be better suited to their needs, 12 years on, or now that they're returning back home. So the platform and our subject matter experts help you identify and help you understand those locations to invest in, or to, ultimately be purchasing your home in as well. Right through to just practically, when we're searching for properties and what our team are doing and keeping our clients updated via their search tracker of the homes that we're looking at, all of the due diligence, so SWOT analysis, chances of buying, what are the vendor terms, solicitor contract reviews, building pests, plumbing and electrical inspections. Our team are handling all of that for you on your behalf and keeping you updated in real time via the platform as well. So, we totally appreciate it. It can be a very sort of mind-boggling experience thinking around, how do I engage a solicitor, or how do I engage a building and pest inspector to check the property? So we manage and take care of that process for you as well. And the only things that we don't do internally are conveyancing and finance, and we have really great expat partners that we work with that can certainly help with those things. So essentially, our subject matter experts and our tool just hopefully gives that confidence to purchase properties. Interestingly, only 1% of the properties that we've purchased for our clients have been viewed by our clients prior to a contract of sale being unconditional. So you certainly don't need to travel back to Australia either if you're going to be buying a property. Everything can be done remotely, but we totally appreciate some people want to travel back before they make a purchase like that, and that's absolutely fine as well. But certainly no need to have to fly from San Francisco just go back to Australia to view homes, we we manage that process for you and take you through video inspections and photos and all of those sorts of things as well. So hopefully that just gives a little bit more detail as to practically how we go about doing that as well. And so if you do want to talk more about the Australian property market or our services, that QR code there just links directly to my calendar. So please feel free to book a time, whether you're thinking about purchasing a property and wanting to do it on your own. More than happy to jump on a call and just talk you through what it is that you need to be looking out for, or help with some of those service providers. Or if you don't want to go it alone and do want to use a service like ours, please also just book a time as well, and we can chat more about your brief, more about the Australian market. More than happy, with no obligation, to introduce people to other members of the team, our real estate, construction, property management teams. If you'd like to talk directly with those subject matter experts as well, that's no issues at all. So just shy of just on sort of 35 minutes there. That sort of concludes that part of the presentation. So we thank everyone so much. We hope that gave you some valuable insights into the market, what it is that we do. But now we'll just open the floor for any questions. We'll also be sharing this presentation, or just a recording of that as well. So we'll share the deck, but then also the recording, so everyone's got that as well. But if you have any questions, I will stop sharing my screen and we'll just see if any questions pop up in the Q&A box. But obviously also no worries if not as well. But we'll just hang on for a couple of moments just to see if anyone does have any questions. So anything at all, don't hesitate to ask us anything on the market or our services.
It's often a good sign.
Yeah, hopefully you explained everything quite well. We appreciate there's sort of a lot to take in when it comes to the data and so forth as well. Awesome. Well, it doesn't actually look like anyone does have any questions. So, Brendan has raised your hand. So Brendan, you just have to, in the Q&A box down on the bottom of the screen, you'll be able to put a question into that box and we'll be able to answer that for you. No question, that's all right. Yep, Brendan, are there any Australian to US tax advantages? That's a very good question. Just to point out, we're not licensed tax accountants, and we can certainly make a good introduction to Australian and US tax accountants. And as far as a totally advice of a general nature. So there is a tax treaty with the US and with Australia, so you should only be paying tax in one country. As far as any Australian to US tax advantages, nothing off the sort of top of my head that I'd be able to tell you. From a negative gearing perspective, again, as advice of a general nature, as most expats are non-resident for tax purposes, so you're not paying tax in Australia, but you're paying tax here in the US. Most likely the property would be negatively geared, and so from that perspective, that negative gearing, those tax losses get stored as tax credits essentially. So when you eventually do return to Australia, those tax credits or losses come off your salary again. So you're certainly not missing out on negative gearing, because that does come off your Australian-based income again once you return to Australia and start earning an income again in Australia. Or alternatively, if you never return to Australia, they do come off the capital gains tax exposure when you sell the property. So that's just a little bit on that. But Brendan, more than happy to introduce you to an Australian and US tax accountant that can talk through that in more detail. And just Ariel, do we have any experience with Airbnb and short-term rentals? So yes, absolutely we do. It's a very common brief of Australian expats, because people love to purchase properties and be able to use them when they're back home in Australia. So it's really common. I suppose from that perspective, we purchase all of license AirDNA's data, so have really good access to sort of nightly rates, vacancies in particular areas and so forth. We don't manage properties on the short-term rental market. It is a different skill set, but we can absolutely certainly recommend great short-term rental property managers in different areas. We only manage properties on the long-term market. But in short, yes, absolutely. absolutely have lots of briefs where we're purchasing properties for clients that they're putting on the short-term rental market. One, because the yields are typically much higher, but obviously that income is lumpy based on, different seasonality in the year, but also because it does give them the opportunity to stay in that home when they're back in Australia on holidays. So hopefully that just answers those two questions. Brendan, do you handle the mortgages? Are there difficulties because you're in San Francisco? So we work with a fantastic expat mortgage partner or Australian expat mortgage partner called Odin Mortgage. And we have lots of joint clients in the US. So we don't personally look after financing, but Odin specifically just work with Australian expats and have many clients here in San Francisco. There is, as far as extra difficulties, there are extra steps that you do need to get across. Unfortunately, it's much more of a manual process. The Australian banking systems don't recognise or can't ingest documents that have US dollars and so forth, your IRS sort of forms and so forth. So that is a manual process. So it does take a little bit longer because that is a manual process of going through those documents. But essentially, again, absolutely as advice of a general nature, as an Australian expat or a non-resident for tax purposes, you typically will need a minimum of a 20% deposit, and you typically can get an 80% mortgage, but it just does depend on your circumstances. But it's really just important to work with a really good expat mortgage broker. They will know all of the different policies that the different banks have based on, the USD currency that you're earning and how your salaries and packages are put together. So it's not as simple as if you are in country in Australia as a tax resident, but certainly absolutely achievable. And out of the hundreds of homes we're buying for our clients, 90 to 95% of those clients have mortgages. So absolutely all of our clients are getting mortgages in Australia. So I hope that does help that answer that question as well. But Brendan, more than happy to do an introduction to the guys at Odin who would be able to specifically answer mortgage questions for you. Awesome. Well, thank you so much, everyone. We appreciate you staying on. We appreciate those questions. And as we're just sort of nearly at 5:45, we will jump off now. But thanks again. We hope that was really informative. We will share the slides with you. Please feel absolutely free to book a time in the calendar, even if it's just to talk about the market or to want introductions to other people in our team to talk about the market as well. That's no issues at all. And specifically, Brendan, I'll also do and pass on the details for Odin for you as well. But again, thanks so much. We really appreciate it. Mel, thanks so much for hosting for us. And thanks everyone, and have a great night.
Thanks, guys. Thanks for tuning in.
Bye.